Good morning, everyone, and welcome to this special webinar looking at your clients' cash flow. My name is Grant Chapman. I work in the advisor marketing team, and I'm your host for today's session. It's great to have you join us today. And before we begin, I'd just like to acknowledge the traditional owners on the land at which we meet today, the Gadigal people of the Eora Nation, where I'm here in Sydney, and pay my respects to elders past, present, and emerging. In today's webinar, we're going to take a look at some research around the cash flow issues that many of your clients are experiencing, how you can help them improve their cash flow position, and cover some of the reports and tools in QuickBooks Online that can help you understand their current cash flow situation, as well as model their future situation with some easy to use what if scenario modeling. You'll also hear from the team at ANZ with some insights into the needs of small business owners, including borrowing frustrations and how solutions from ANZ can help with cash flows keeping them up at night. Now, it's likely that everyone on the call today is aware of Intuit's flagship product, QuickBooks Online, given that it's used by more than 300,000 accountants and bookkeepers and more than 7 million small businesses all around the world. But importantly, it also includes a number of features that only accountants and bookkeepers can access to really help you power through working with your clients' books, like books review and prep for taxes. There's also a really great feature in there called Cash Flow Planner, and we're going to touch on that today. I'm going to jump into some very quick housekeeping now. We've got a large crowd here online, so we actually have you all on mute. We do have a Q&A session at the end of the presentation, time permitting. So if you do have a question, submit it through the Q&A feature and we'll aim to answer as many as we can at the end of the session. The event is being recorded, so we'll be providing everyone who registered with a copy via email. So watch out for an email in your inbox that'll let you review any of the content that we share today or share it with your other team members. If you're having any technical difficulties with not being able to see or hear the presentation, we suggest you refresh your browser, restart your device, or you try a different device. Again, you will receive a copy of the recording though, so while it's not as good as the live thing, at least there's no need to panic that you're going to miss out on anything. With the housekeeping out of the way, let's jump into today's session. And today you're going to hear from Chrissy Kluge. Chrissy is a partner manager with us here at Intuit QuickBooks and has spent the last few years really understanding the needs of our accounting and bookkeeping community, the needs of their clients, and working to enable accountants and bookkeeping practices to work more efficiently across the entire QuickBooks suite. Since she's so embedded with our advisor community and speaking to them daily, she's also managed to find out a lot about your furry friends, your kids, and what's on for the weekend. But I think deep down, getting to know her clients as people beyond just knowing about their businesses is probably what keeps her coming to work every day. Christy's going to take a look at what's actually behind those cash flow issues that many of your clients are experiencing, how you can help them gain a clearer picture of their position, as well as how tools in the QuickBooks suite can help. We also have Jeremy Wolfe with us, and Jeremy currently leads ANZ Commercial's digital product origination strategy and has been responsible for capability delivery and ongoing channel ownership in his role as tribe lead of digital origination and innovation. Jeremy has more than 15 years of leadership and hands-on experience in developing and executing market-leading digital and data propositions, leading very complex program delivery and managing sales, strategy, technology, analytics, and operations functions within the Australian financial services sector. He's going to be sharing his insights and some of his experience and research with you today. With that, I'm going to hand it over to Christy from our team. Thank you.
Thanks, Grant. Well, hello, guys. I'm excited to be here today, and we're going to take a look at some of the tips and tools to help you, our advisors, work with your clients that are looking for a better way to manage their cash flow. So, as accountants and bookkeepers, you guys have been at the forefront of helping small businesses grapple with ongoing uncertainty in all sectors of the economy. And the advice you guys are giving to your small businesses is pivotal in managing their cash flow in order to be resilient as possible. So we've conducted some research here at Intuit recently, and what we saw is that majority of small businesses, 60% of them, have experienced a cash flow issue at some point during their company's history. Not surprisingly, for many of these, it's occurred in the last 2 years. So last month, our advisor segment lead, Damien Greathead, he was quoted in the Accountants Daily, citing that research shows more than 3/4, 76% to be exact, of SMEs expect to hit a cash flow crisis during 2023. And as inflation continues to bite. So now, as advisors, you know only too well that the impact of cash flow issues can be wide-ranging and weigh on small business owners personally. The ripple effect of this type of stress can be felt far and wide. It impacts relationships, their family, their future businesses, and yet, knowing this, only 30% of small businesses are seeking help from their advisors on improving cash flow situation. That's shocking because, as we just saw, double that number, 60%, are already saying that cash flow is an issue. So it's clear you guys as advisors can play an important role in helping clients with their cash flow. So today we're going to look at how we can go about providing that help and touch on some of the tools in QuickBooks Online, including the cash flow planner that can make this process easier. So if you're not already using QuickBooks Online, what we'll cover is still going to be applicable to your clients, no matter what solution they're using. So now, before you can advise your clients on how to adapt to these changing conditions, you're going to need to get a clear picture of their state of business. So when you dig into the causes, it's not surprising that a decrease in sales or margin is usually reported to be the main contributor. This is a sign of common challenges facing small businesses in our high inflation post-pandemic economy. So naturally, consumers are tightening their purse strings in response to the pressures they're feeling from inflation. And then equally, things like increased rents, increased power bills, they're all just eating away at the margins. So unfortunately, these changes don't stop after sales have been made. And more than a quarter of small business owners, 27% of them, have said that they're not getting paid according to their agreed upon terms. So this is another major contributor to problems with their cash flow. For some businesses and sectors, payment delays of even one day can have a substantial impact and add material stress. So obviously, the more time spent managing money and the less time owners are spending, the less time owners are able to spend money investing in what they need for their customers and actually on growing their business. So if you're a business owner, and especially if you're running your own practice, you know how important it is to know your own numbers. I'm sure you're already telling your clients this, but it's the single most common pain point of any business. Almost every potential issue in a small business points back to poor cash flow, or worse, no cash flow. So whether it's paying bills, hiring, or stocking more products, cash flow is the root of it all. As advisors, one of the best ways you can help your clients is by navigating these muddy waters of poor cash flow and getting to a place of consistent positive cash flow. So this requires constant monthly management. And I want to walk you through a high-level 4-step plan that can help you do that before we dig into a few specifics. So first up, you're going to need to know a view of the landscape by taking a look at their year-to-date balance sheet and profit and loss. Now, this is going to give you a better understanding of how funds are moving through the business and give you an accurate cash flow position. So using the historical data from the cash flow statements provides a solid basis around the finances and the current state of affairs. By blindly making adjustments without knowing what's already in play, that can lead to cash flow struggles down the road. So next, what we want to do, you need to analyze what you know. Once the year-to-date financials have been pulled down, the next step, analyze them in or project them forward. Now, this is the process of spreading the expected revenue and spend across the remainder of the year. But before any projections can be made to the revenue or expenses, you're going to need to get a clear picture of what the cash flow will look like if everything stays the same. And if both revenue and expenses continue as is, what effects is that going to have on the business? So knowing and understanding the effects of your client's current position are going to help you to better advise them on the necessary adjustments so they don't experience this cash flow pain in the future. So now it's time to start the conversations. Having conversations and questions are going to give you the insight you need to know to how to modify things in current cash position. In essence, you'll take what you know and you're going to drop these figures into the respective periods. So if you know they have a contract that only lasts 6 months, put those figures into the appropriate month. If they expect new business, enter the cash amount, not the sales amount, in the month that they're expecting it. A key point to this step is distinguishing between the sales revenue and the cash inflow. Budgeting deals with the sales amount. Cash flow projections deal with the inflows and outflows, which is the movement of the money. So if they sign a contract this month, but the first payment isn't expected for 90 days, you'll enter the first payment received in the 3rd month from today. There's always going to be a number of factors that can change the expected inflows abruptly and frequently. So we recommend updating these monthly to ensure you're catching negative cash flow impacts as soon as possible. Finally, you're going to need to revise the plan as expected cash outflows, sorry. And this is where the tough decision comes into play. But now that you've got a better sense of how cash inflows will occur or not occur, you're going to need to make those expenses accordingly. Under normal circumstances, this is going to involve merely shifting expenses from one month to the next to match up income changes in step 3. But other times, it involves conducting a bit of cost auditing to reduce expenses either temporarily or permanently, because the cash flow just simply isn't there or won't be there in order to cover that cost. So now, once you've worked through these 4 steps and have that high-level view of your client's actual cash flow situation, this is where you can add more value and build upon your role as their trusted advisor, but also can open up new opportunities for them to grow and succeed. So to do this, there's generally 7 key ways for them to turn their cash flow around. First, help them make it easier for customers to pay. Your clients are absolutely spoiled with choice when it comes to payment solutions. There's contactless, mobile, third-party payments, Bitcoin. You need to work with them to understand what they're using, if it meets their customer needs, and importantly, what are the fees they're incurring on a monthly or per payment basis. Simple things like passing these payments on to their customers could result in a significant cost savings at the end of the month. If your clients are using QuickBooks Online, they can send invoices that include a Pay Now button so their customers can make instant payments using their credit or debit card via PayPal. Then you're going to want to explore if they can incentivize customers to pay on time. So although offering every client the same terms are undoubtedly common and simpler, you could be missing a trick here. Differential pricing, early payment bonuses, and late payment penalties are all different methods for improving the cash flow. So the next step is to look at their payment terms. The old carrot and stick approach that offers discounts for early payments and penalties for late payments. This can have a significant impact on improving how quickly invoices are paid. So next, let's review their accounting software settings. Training your clients to get the most out of their accounting software is key, and this goes double for you guys too. So make sure you're using the key features like reoccurring invoices, payment reminders, and even things like QuickBooks Online mobile app. Why not send invoices on the go as soon as the job is complete, rather than waiting to the end of the day or the end of the week when the risk of things falling through the cracks is greater? So for your larger clients, you might want to take a look at solutions like e-invoicing. These can dramatically reduce payment delays. In this scenario, they send invoices that land directly into the customer's accounting solution, which simplifies the approval process and sees invoice paid faster. Again, improving your client's cash flow. Now, taking advantage of these settings in the tools they already have, or looking at new ones like in e-invoicing, can take the pain out of chasing unpaid invoices and increase your client's collection rate. But it also frees up time for them to focus on the value-adding tasks and serving their clients so that they can better keep their business ticking over. Next, we want to look at cost savings. So when you've had a look at expediting money coming in, the next step, you got to see what money is going out. Payment's often the largest outgoing for any business, and it's important to get a handle on it early before things begin to get too unhappy. Payment costs have increased recently. There's been an increase in the super guarantee from 11% from the 1st of July, but not to mention, employees are also asking for raises to keep up with the cost of living solution. So encouraging your clients to analyze the needs of the business and perhaps looking at options like shifting some roles to a part-time model or maybe even temporarily might help. There's also other options you can explore with your client. Could they encourage more members of the team to work from home, for example? This could reduce the cost of office running or enable maybe a smaller premises at a reduced rate. You're also going to need to consider the impact of new assets and investments. Look closely at your client's plan for upcoming capital expenditure. Before committing to any new expenditure, make sure your client's cash reserves and cash flow forecast can accommodate these purchases if situations change. The tools in the cash flow planner are great for this kind of what-if planning and I'll take you through that in a minute. It's also important to work with your clients on the instant asset write-off scheme, which refers to the small business tax breaks on eligible purchases up to $20,000. because that threshold is significantly lower than the breaks provided by the previous temporary full-term expensing measure, which allowed businesses to claim an immediate tax deduction for any eligible asset, regardless of the value. The $20,000 threshold does, however, operate on a per asset basis. So that means small businesses can instantly write off multiple assets. So finally, when working with suppliers, lenders, and government agencies, explore the options for deferring payments or restructure terms and rates that can help you. You can use the transaction detail by account report in QuickBooks Online. Filter by the supplier to work with your clients to identify which suppliers or lenders you could contact and maybe have these discussions. Help your clients to understand they can leverage financial services too. There's a whole host of new and innovative solutions out there that can help them get their cash flow back on track. And shortly, you'll hear from Jeremy Strong from ANZ on their insights and solutions. All right, cutting unnecessary spending. Might sound obvious, but of all the ways to improve your cash flow, this is the most effective to make a difference quickly. Meals and entertainment costs are often, and unfortunately, it's one of the first areas to get cut. But suggesting that clients minimize spending in this area, even for just the next few months, can result in savings. You can always use the transaction detail by account report in QuickBooks Online to quickly see what your clients are spending on meal and entertainment expenses. You can use this same report to look at subscriptions or memberships that aren't necessarily in short term, which could be canceled or suspended. Finally, and this is always the most controversial option, the same report can be used to analyze marketing and advertising cost. So now, while these budgets typically have some flexibility, it's important to work with your clients and understand what's the flow-on effect from any of these reductions going to have on their sales, and what's the resulting effect their cash flow down the track. So lastly, you're going to need to be making cash flow forecasting an always-on activity. This process shouldn't be a one-off. It's important that you've built this process into your client workflow, that it becomes a regular, ongoing process, and one that becomes ingrained with your clients so they make better decisions about their business. So in the next slide, we're going to take a look at how the cash flow planner in QuickBooks can do just that for you. It can give your clients a clear understanding of their cash flow situation and let them model the impact of various what-if scenarios. Preparing and analyzing business cash flows and forecast is optimal if performed monthly. So weekly is best, quarterly is reasonable. We should never leave it to 6 months or at the end of the financial year. Otherwise, what's the point of doing it at all? Oh, and don't forget about the seasonal fluctuations. These can leave some businesses with quiet periods and short on cash when the bills start rolling in. So taking a more strategic approach to cash flow management can prevent this from happening. Ultimately, you should be working with your cash flows. You should be working with your clients to ensure they're having a working capital ratio between 2 to 0 and 1 to 2 to help better manage the day-to-day operations of running their business. Now, we've just worked through the processes and some of the reports that can save you time and give you a detailed, complete picture of your client's cash flow situation. I want to quickly highlight a tool that can help you get a quick snapshot of your client's cash flow and apply those what-if modelings. It's QuickBooks Online Cash Flow Planner. It uses historical data from the accounts that clients have connected to QuickBooks Online to help forecast future reoccurring income and expenses. It tracks their bills with their supplier credit terms and lets you move the dates of when payments are due to see how the impact of these transactions can have on your client's cash flow. So setting up the cash flow planner is straightforward, lets you fine-tune your forecast. Super cool is the ability to add hypothetical money in and out of situations to better understand of your cash flow up to 15 months and ahead. A minor note on this though, cash flow planner isn't available if your clients have enabled multi-currency. So every transaction syncs right to the dashboard in the cash flow planner. So you can monitor all of your clients' business balances all in one place. It's going to include bank accounts and credit cards, sales and invoices, expenses, bills and payroll, GST and tax, and all of your customer details. It uses your client's bank and QuickBooks activity to predict money in and money out over a full year ahead. The great thing is, the adjustments you make in the cash flow planner, they're not going to affect your accounting in QuickBooks, won't impact your chart of accounts or your online banking transactions. So what I love is the smart predictions tool that sits behind it that makes it easy to see when invoices are likely to be paid. It even factors your clients' regular late paying clients by using their transaction history, because we all know there's a few of those customers out there, but this is going to help to ensure that your clients aren't getting caught out by that. So knowing your clients' businesses it's going to mean you can help them to better budget and create a better future for anything that's going to come up in advance. With a better understanding of your client's finances and cash flow situation, you can begin to create an action plan, write off bad debts for some suppliers, implement flexible plans for others, and even look at other solutions that might be out there in the market to help free up cash flow. What's more is, once you've modeled those impacts, playing around with those what-if scenarios, looking at things like capital expenditure, new contracts being signed, whatever it is that your client wants to better understand, you then have the option to produce a cash flow report for your records and for your client by exporting it all into a PDF. It even has a chart modeling to show their cash flow for the period ahead, based off of their historical data and any planned or modeled transactions you've chosen to include. It's pretty cool, I think. So yeah, that's it for the cash flow planner. It's provided as part of the QuickBooks subscription already. So it's there, ready for you to give it a go. And it's just such a great way to provide some comfort to your clients and what their future might look like. And hey, it's going to make you look more proactive too, right? So win-win. And well, gang, that's it for me for now. So I'll hand it over to Jeremy from ANZ.
Thanks so much, Christy, and good morning, everyone. Really, really great to be here with you this morning. So just to recap, so I'm Jeremy Wolfe and I lead ANZ's digital propositions for our commercial bank. And I'm responsible for some of our exciting origination capabilities, like our GoBiz lending platform that we're going to talk about and show you a little bit about in a few minutes' time. But just to kick off, at ANZ, we, a bit like some of Christy's insights, we engage a sort of a host of different research companies and obviously work very closely with our customer base to see and hear firsthand what's happening in their businesses and across the economy more broadly. And we find these insights obviously really important because it allows us to stay focused on what is impacting our customers. And of course, we've got a wonderful team of bankers that are talking to customers regularly as well. So what we thought we'd do this morning is just touch on some of the key insights that we're seeing, really, I think congruent with some of the overview, Christy, that you shared. And then once we've done that, we're going to talk a little bit about some of our cash flow solutions and lending solutions that may help and support some of your clients. So if we could go to the first slide, please. And what you can see, this is a business confidence. And what's quite interesting is that there's been a decline in confidence that SMEs have had about the future of their business that we've really started to see become apparent. You can see the dotted line from the end of 22, last calendar year. And per the grey line, it's not just short-term confidence with the factors that Christy touched on. It's also longer-term outlook and confidence that started to trend down. And I'm sure that's congruent with a lot of the client interactions you're having as well. Now, as we dig a little bit deeper towards this, and if we don't mind moving please to the next slide, you can see that the reduction in this confidence is really, three core things: economic concerns, some supply chain challenges, and then the cost pressures that obviously Christy was touching on as well. And really the broader cost of living challenges that are starting to weigh in on business owners. And so that negative sentiment that we're really seeing in the consumer sense is clearly starting to bleed into the business sector as well. But there is some buoyancy in a lot of our discussions and the panels that we have with customer groups. We do often hear that, whilst this is a key issue, it's not spiraling out of control, and that, a lot of businesses are being quite open about their ability to handle it. And that whilst costs are high, the rate of increase is certainly slowing, and we're hearing that quite a lot. And really, again, as Chrissy, as you pointed out, wage increases are really evident. But in some sense, we hear that that's more manageable, and it is other things like utilities and insurance comes up quite a bit that are harder to manage costs that are impacting businesses and our customers. And so, of course, all of that puts, increasing pressure on cash flow. And you can see on the next slide some of the verbatim feedback from the customers. This is a panel of 500 customers that we've discussed, these challenges with recently. And, just to sort of summate some of the key ones here, that the challenges around cash flow and economic concerns, it's consistency across payments, a decline in customers, obviously increase in interest payments, lumpy sort of sales, a net decrease in product demand, and obviously funding limitations you can see on the left as well. And as I mentioned on the previous slide, from a broader economic standpoint, it's a sort of a bleakish outlook, some challenges with exporting and the cost to export, and obviously also the impact some of the housing challenges are starting to have through certain industries. And what we see through a lot of these insights and data is that SMEs, business owners with lower turnover, are more likely to face cash flow challenges, whereas businesses with higher turnover are more challenged by the supply chain issues that we mentioned. And again, I'm sure this is really what backs up a lot of the interactions that you guys see and have on a daily basis. What's interesting though, and if we just go over to slide 5, please, more than a third of businesses that we discussed, despite that sort of position, actually indicated that they intend to increase their annual revenue, business savings, or just the efficiency of their business in the next 6 to 12 months. And within ANZ, we've actually noticed quite a significant increase in demand for overdrafts, vehicle and equipment finance, and also term debt in the last half compared to the previous half. So whilst businesses are certainly feeling and seeing things cooling down, in a comparative sense, there's still a lot of positivity. And I think a good example there is that whilst finding staff and even certain materials is really challenging, it's not nearly as challenging as it was through the pandemic and immediately following the pandemic. And we're certainly seeing and hearing that a lot as well. So whilst there has been some subdued revenue, broadly speaking, there's, still, I guess we're not seeing negative growth there. And so finally, again, we do see and hear a lot that the rising rate environment has impacted B2C more so at the moment than B2B business and our customers. Now, interestingly, when we look at what that means for choice of lenders and funding on the next slide, you can see that speed to access funds is always very, very high. And at ANZ, we've really been focusing on helping our existing customers, but also new customers have the confidence and security to grow their business and really handle a lot of the fluctuations that, Christy, you were discussing and that are apparent here, and also manage some of the unexpected events. And so our focus is not just on the speed that which we can help customers access funds, but also the certainty and the time that we can, how quickly we can give them, an understanding of their likelihood to be able to borrow. And it's for this reason that we've been really excited by our partnership with QuickBooks over an extended period, and some of the integrations and platform capability we've delivered together that's really going to help your customers be able to not just access capital quicker, but as I mentioned, more quickly understand their likelihood of being able to borrow. And then just finally, from an insight standpoint, and I'm sure this is something that you'll all be nodding to, you'll see on the next slide, when it comes to banking tools and capabilities, the thing that is always at the top, and we've highlighted it here, is software integration and bank feeds. And, for obvious reason, we're very, very proud of, the bank feeds that we offer with QuickBooks. Many of you will be aware we're actually QuickBooks' first Australian direct bank feed partner. I think we've got a really good direct bank feed offering, very, very broad product set and compatibility, and we often get some excellent feedback around that. And we really, hold that near and dear because we appreciate how critical that is. And off the back of that, then we can really look at how we utilize QuickBooks data for lending that we're going to show you in a moment. And so as we talk about, those broader insights, the importance of bank feeds, and then how we utilize that data for lending, we're going to spend a couple of minutes now talking about ANZ GoBiz, which is our digital lending proposition. So really an application that allows customers to connect their QuickBooks and other accounting software data and get an immediate understanding of their borrowing power, and then an immediate lending decision in a couple of minutes. And as you can probably imagine, we hear lots of great customer stories about this tool. It is still pretty new. And one of my favorites is a customer, Andrew, who's a QuickBooks customer. And Andrew was returning from a trade show in Brisbane and driving up north to Mackay, and needed to, get an increase in his overdraft to, fulfill some orders that he'd received. Spoke to his ANZ banker, who told Andrew about GoBiz. He actually pulled over on the side of the road on the freeway, applied on his phone. And I think he told us that it was about 7 or 8 minutes. He got a conditional approval for a couple of $100,000 increase. That was on the Monday afternoon. And by the Wednesday, the limit had been activated and you had access to the fund. So we love hearing stories like that. And what we thought would be a little bit of fun to sort of end today's session is to give you a really quick live demonstration of ANZ GoBiz and how you can connect your QuickBooks data, your client's QuickBooks data, to understand borrowing power and they get an immediate credit decision. So without further ado, we'll jump into the application. And what you'll see, we're going to show you this sort of no holes barred, but effectively, this is what your clients will see when they launch the experience from ANZ.com. You'll notice that it's quite a different, I guess, application experience. It's called natural language. It's a little bit like, for those of you that maybe have flown with Virgin, I am not carrying dangerous goods. We find that this tests incredibly well with our customers because it takes the cognitive sort of overload of a complex application and experience away. And so we really just ask our customers to complete one simple question at a time, and we try and give them as much dynamic feedback through the application as possible. So at the moment, you can see we're linking the ABN or the ACN, selecting the industry. But broadly speaking, this first module is a series of short questions that will allow us to substantiate the customer's eligibility for GoBiz lending. And when we say GoBiz lending, at the moment, GoBiz supports term loans, unsecured term loans, I should say, up to $500,000, overdrafts up to $300,000, and as of a couple of weeks ago, business credit cards up to $50K. So it's pretty cool. And again, customers can understand their ability to borrow that really instantly by connecting their QuickBooks and other accounting software data. So you can see we're just asking some questions here around, their existing ANZ relationship, if they've been referred by a banker so that we can help them with other needs subsequent to this. And then we allow the customer to select the products that they want. We're really excited because this is one simple experience where the customer can select multiple products. So we don't make it really complicated. You can see we're asking the customer here to tell us why they want the money. And then in a moment, we'll get to the fun bit, which is where we get to connect to QuickBooks Live and determine what the serviceability is. And you can see here, we're really, passionate about helping customers understand the cost of facilities. We think certainly with overdrafts, and that's the product that we're applying for here, a lot of customers don't understand how interest is calculated. And that's why you can see some of that financial literacy components that we've incorporated. So now we're obviously showing a QuickBooks integration. And so you'll all be familiar with this, but the customer will connect their QuickBooks account. And then we're really proud that in our experience, we show a playback of the profit and loss and balance sheet that we're going to use to determine the applicant's ability to service the debt. So you'll see in a moment that we show a simple summary on screen within the GoBiz experience, and we make sure that the customer is really, really clear and understands that that's the information that we're going to be using to base their serviceability assessment. You can see we're just connecting to one of the company files, and we have lots and lots of them, as many of you do, because we use them for all of our development and testing. And so live at the moment, we're now calling the QuickBooks APIs, consuming the financial information so that we can make that decision. And you'll see in half a second, all going well, it'll be, there you go. It's now sort of live rendered into our application, and we allow the customer to confirm that they feel comfortable sharing that information for the purpose of us assessing their loan. The next thing we do is we look at their balance sheet, and we can see that this business doesn't have any existing lending. If they did have lending, we either see it on their balance sheet and we'd ask them a little bit about it, or perhaps for whatever reason it's not there, and we're asking the customer to tell us about any facilities they have. So they'll do that really quickly, and then they'll confirm that all the information is true and correct. And we actually integrate the data to our core credit decisioning system inside the bank, and we're able to determine to within a $500 increment exactly how much this customer can afford. And so we give them that feedback in real time. It's literally this simple, and we're so excited by it and the partnership with QuickBooks to bring this to life. So it means that we haven't hit a customer's credit file, we haven't needed to do a complex application, there's no paper forms, and you can see as soon as we click this button, we're now determining exactly what their borrowing power is. And so, for example, a customer may have applied for a $300,000 overdraft, but they're only able to access, $20,000, and we'll give them that feedback live inside the experience and allow them to only proceed and submit an application for an amount that they can afford. We then allow the customer to configure the facility. Obviously, depending on the product, there's different things that you may or may not want to do, like add interest-only periods, change the loan term, repayment frequency, etc. And really, that is the hard part done. From here, we need to collect a little bit of information, obviously, around the business, other directors and partners, depending on the construct of the entity. And then at the end of this, you'll see the applicant gets an opportunity to review all of their information, tell us that it's correct, and then we actually run a live credit check and we give them the outcome then and there inside this experience. So customers get, where they're eligible, of course, a conditional approval. And following, and you'll see that hopefully all going well in a moment, and from that conditional approval, we have a dedicated fulfillment team in Melbourne, and they will actually complete the fulfillment of the application. We tell customers that, formally we will be able to draw down a loan within 4 days. But as I mentioned before, we have so many customers like Andrew that do have a need to either have their overdraft limit or a term debt funded well within that, and we can obviously accommodate that. So you can see this is just the last couple of questions in the experience. We do like to get access or permission to speak to one of you, an accountant or a CFO where the business has one, in case we need to clarify anything. We don't do that very often, but at times we do see some.
It looks like we've lost Jeremy there, unfortunately. Must have had a slight hiccup with his camera feed. Let's see if we can get him back. Perhaps not. We'll jump into a little bit of early Q&A. I know Jeremy was just about wrapped up there anyway. So we will have details on the ANZ GoBiz solution to you out by email tomorrow, along with a copy of the recording today, along with some information on the cash flow planner. If you do have any questions for us, jump into the Q&A. It looks like Jeremy's offline, so unfortunately we won't be able to answer any regarding to ANZ solution. Christy, I did have a quick one for you, which was just around the cash flow planner. And how you actually access that. Where do you actually access that within QuickBooks Online?
Yeah, should have told you that earlier, but very, very easy, guys. When you go into your client's file, you'll notice on the left hand, on the dashboard on the left, there's it says cash flow. If you hover over cash flow, you'll see planner pop up. Just click on the planner there. It's going to give you tips on the screen. There's also going to be a link in there with very detailed step-by-step guide on kind of how to use all of its features. Yeah.
Amazing. Thanks, Christy. Folks, we might have to wrap up a couple of minutes early, but like I say, we'll have more information to you about the ANZ GoBusiness solution, how that all works, the QuickBooks cash flow planner, a copy of the recording, and some other information that can help your clients with their cash flow situation during what is a pretty difficult time for many small businesses out there. So thanks so much for your time. Christy, thank you. Jeremy, thanks very much. Sorry we lost you at the end there.
Bye, Jeremy.
But thanks so much, and we'll see you at our next webinar later in August. Thanks so much.
Thanks. Bye, guys.